got to tell you, Friday, a little after 7:30 is when that big jobs number came in. It was a big, big number, not expected. What does that do to any kind of Fed expectation?
Well, I think it's part and parcel. The Fed has said they're going to be more data dependent, and we got mixed results throughout the week. For example, we had a manufacturing PMI a couple of days ago, and that was well below expectations. The manufacturing economy is in recession relative to the service sector, which is, in the sense, good for the United States since the bulk of GDP in the U.S. is driven from that. And that's manifest in that jobs report. The U.S. economy added over 300,000 jobs, well ahead of expectations. There are also upward revisions to the two prior months. Wage growth came in at 4.3% year over year, which is a little weaker than expected, so the Fed would probably like that. But basically, the labor market remains strong, and as long as people have a job, they tend to spend. We also saw in the JOLTS report earlier this week that the number of job openings actually increased this month, the second highest level in the last year at 10.1 million job openings. So the job market remains very strong, and it's certainly something that will factor into the Fed's decision-making in June.
And for what it's worth, the ADP number came in, I believe, on Thursday, right? And again, another bump there.
Right. It was a strong number as well. So the U.S. economy remains on solid footing. Inflation still remains persistent. I saw one thing that was very interesting is when you compare a mortgage payment to a rental payment, in most cities, with the exception of 4, it's significantly more expensive to own than it is to rent, which is one of the reasons why we believe inflation will be persistent, because owner equivalent rent is over 30% of CPI.
Months ago, Fed Chairman Jerome Powell said that there probably was going to be some short-term pain in employment in the battle against inflation. We haven't seen that at all. That's one data point. Then we're talking about manufacturing PMI.
Well, Jerome Powell was, he expected to inflict some pain because he expected that as the Fed raised rates, the economy would weaken and perhaps falter. And while we have seen, some slowing in wage pressures, we've seen some slowing in housing price advances, the effects have not really been that significant yet, which causes many to believe the Fed is not done hiking and certainly won't be cutting rates throughout the balance of the year unless something breaks.
Should we be troubled by the fact that more than 100% of SPX market cap gains this year have been driven by just 7 stocks?
Well, if you own them, you're not troubled at all. Right. You know what I mean? But
talk about a tentpole, right?
Well, yeah, but that, overconcentration and performance from a select few stocks is factually fairly normal. But what I think people need to pay attention to, and when they look at their statements, they're going to see that the average stock in the month of May was actually down 4%, even though the NASDAQ was up 8%. So don't expect an 8% return on your account statement. And many of those companies that have advanced so dramatically are now very richly priced. So unless the market starts to broaden out, my feeling is that the likelihood of a near-term pullback is likely.
One of the bigger stories from a month or so ago was the banking sector. What's the latest with that? Because it seems to have disappeared.
Well, the banking thing was kind of manufactured by poor management. Several banks got in trouble because interest rates rose dramatically and they weren't positioned for it. Normally, when you have a problem in banks, it's with credit, and we haven't seen that yet. Obviously, banks are now a little bit less reluctant to loan. We know liquidity is the lifeblood of an economy, and to the degree that banks are less willing to lend out to small businesses and the rest, that could put a downward pressure on the economy. But the banking sector has been reasonably quiet recently. I thought the FDIC and the Treasury Department did a nice job of cleaning up that mess. But I think there are some things that need to be done over time. But right now, the banking sector seems to be okay.